I would like to introduce our next speaker. Is Skaffold's general manager. He is a qualified chartered financial analyst. He has over 20 years experience in the industry, and Chris has also been investing using Skaffold, and he's done in the past 3 years after he set up his self-managed super fund. Chris's personal SMSF portfolios exceeded 100% in returns. Ladies and gentlemen, Chris Batchelor. Now, Chris, every year since 2012, the wonderful folk at Money Magazine have asked us to identify 5 standout stocks for the year. Now, since 2012, assuming you bought those top 5 stocks and rebalanced them each year into the new top 5, you'd be sitting on a pretty 74% return. Now, that's not too shabby. I suppose the question there, Chris, is over the last 3 years, on average, Skaffold has returned 20.3% per annum, while the All Ords has returned 7.5% per annum. Now, how did you guys at Skaffold do that?
Thanks very much, Shepard, and thanks everyone for listening in today. Well, the key thing there, Shepard, as has already been discussed today, is the importance of having a disciplined process and then rigorously applying that process. Now, the process we applied to generate this portfolio for Money Magazine is not necessarily perfect, and it may not be right for you, but one thing it is, it's methodical. And if you can stick with a methodical process that's well thought out, you will have a very good chance of success. I should just add that, as Roger's just discussed, normally we wouldn't advocate a portfolio of only 5 stocks. However, that's what the magazine requested of us, and so we fit it in with their requirements. But what I'll do now, I'll just quickly run through how we built that portfolio and then get into what you could do today. Okay, so we started with the in 2012, the beginning of 2012, and we put together a hypothetical $50,000 and spread it across, equally weighted across 5 stocks. And those were the ones showing on screen now. And over that year, some of those stocks did really well, like Codan did 80% and ARB did 50%, M2 did nearly 50%, and then a couple of them did really poorly. Seymour White and ThinkSmart were in the negative 40s. The long and the short of all of that was a total return of around 18%. So come the beginning of 2013, we sold all those positions, added in the dividends that we had earned, and reallocated that money, or rebalanced our portfolio across these 5 stocks. And you can see there, Flight Centre. Now, Flight Centre did really well at 70%, Cedar Woods 64%, and so on. And the disaster in that particular group was Mastermind, which halved. Fast track to 2014, same process. We rebalanced across 5 new stocks. This time we decided to go international. We put the money into Microsoft. What If was our Australian stock for that year. WestJet's a Canadian jet airline, Great Wall Motors, and Ashmore, which is a British fund management stock. 4 of the stocks did well. Ashmore was the one that didn't do so well in that year. And of course, last year was a great year to go international because of the fact that the Australian dollar fell, and so we got a bit of a kicker from that. The long and the short of all of that is that we've achieved over 20% per annum. Now, what I'm going to do is flick over here into Skaffold, and what's resulted is there's $50,000 is now $94,000. I'll move on to talking to you about the process that we use to arrive at the top 5 stocks for the Money Management magazine. Now, what I'm going to do is start in the Skaffold aerial view, and you can see there that this particular view is showing you the size of the business on the x-axis. So across you've got small to large, and then growth prospects on the y-axis, so low growth prospects or negative up to high and positive growth prospects. Now, what I want to do is show you a filter that we built in order to be able to derive these stocks for the money portfolio. I've pre-built it just to save time, and you can see as I highlight there some of the criteria, and I'll quickly talk through what those criteria were. So as I select that stock, you see the universe immediately narrows down to 105 stocks, as shown there. Now, if I pull this up here, you'll see that we've started by getting rid of what we call zero value stocks. So they're stocks that just do not make any money, and are surprisingly large. Around 2/3 of the stocks listed on the ASX do not actually make money. Next, we've focused in on the higher quality Skaffold scores, A1 through to B2, including some A3s. Looked for a positive return on equity. Looked for stocks with low debt, less than 40% debt. As you know, we prefer stocks with low debt because they're much less likely to experience a catastrophe. We like stocks that are covered by analysts. It just gives us a higher degree of confidence in the future of the business, the fact that analysts are indeed looking at the business. We selected stocks with forecast change in value greater than 2%. As Roger mentioned, you're looking over the long term to at least match inflation, so that gave us that. And then we also want stocks that have had a positive EPS growth. So all of those things resulted in 105 stocks. Now, to narrow the universe a little bit further, I can add additional criteria here. So one that we added was we focused in on the funding surplus. Now, what that basically means is that the company is generating more cash than what it's spending in cash. And we look at it over the long terms, over a period of 10 years. You know, any business will have short-term periods where they spend more than they make, and that's fine if they're investing in new assets. But over the long term, you want a business to be able to generate enough funding to cover all of the expenses, including capital expenditure and dividends. Otherwise, they're going to have to dip into, or they're going to have to either raise capital, be that share capital, equity capital, or debt capital. Okay, so if I add in the funding surplus and apply that, you'll see that universe should contract to a smaller number of stocks, and you can see that's reduced now to 42 stocks. Now, what I want to show you here is this particular view is great for getting an overview of where the stocks sit in the market, but what we can also do is shift into this stock list view. And what that gives us is a more traditional table type of view of the market.
When we apply the filter that you're applying today, are we going to get the same results that you got for Money Magazine, or are we going to get different results today?
Well, we will get different results, Shepard. And the reason for that is basically, well, there's two factors. One, the share market never stands still. So prices change, and therefore stocks that looked attractive 6-8 weeks ago are no longer looking attractive. And the other thing, of course, is businesses change. And right now we're in the midst of reporting season, and so new information is coming to light. And so some stocks that were previously not attractive look attractive, and others the opposite. So you can see now we have this list of 42 stocks here on the screen, and we can use a feature that we call the quick filter here to narrow this down further. So what I can do is just open that up, and then I can sort by any particular column. So I'll sort by safety margin, and I'll just take the stocks that have a safety margin greater than 20%. Actually, that's not yesterday. So yesterday that was in, and yesterday that one was in, but now they're excluded, and that's an example of how this changes so rapidly. I might just include REA Group just for the sake of it. So that gives us 8 stocks, and I can just keep those, adjust my filter, so that's now been saved to the filter, so next time I come I can look at that and see all of that together. Then what you can sort, and we sorted by market cap for the portfolio in the Money Magazine, and we took the top 5 based on that. Now you can see here very clearly that it's quite, well, maybe you can't because you may not know what was in Money, but I'll get to that in a minute. But today the top 5 would be CBA and Westpac, REA Group, Flight Centre, and Genworth Mortgage Insurance. Another thing that is quite cool to do here is you can edit these columns. So if, for example, you really want to see what the funding surplus was like, well, you can just click on that, save the columns, and change what you can see in your table view.
Okay, so you mentioned we got the Money Magazine top 5. What were the results when we ran this on 2 January?
Okay, so on the 2nd of Jan, we ran it, and this was the portfolio that was generated. So you can see they're quite different. ANZ, Breville, Nick Scali, REA Group and Flight Centre. Now, those 5 stocks are already up 8% in just a few weeks, so it's really going well. And as you can see, this portfolio here is looking at the last 3 years. The only qualifier is it doesn't include those 4 international stocks from last year, but the amount of money is now 94,110, having started at 50,000 just over 3 years ago. Now, one of the really cool things you can do with Skaffold is use what we call the compare feature. So if we're looking at a portfolio with 5 stocks like that, or we could be looking at a filter or any number of different things, we can click on this little button called compare stocks, and we can see how each of those stocks look side by side. Now, as you might expect, these stocks look pretty attractive, and hence the reason we chose them. So these are the summary points for the stocks, and you can see that there's a lot of very positive points. There's high return on equity, etc., etc. You can also see that they're all A2 or A1 businesses, all with positive historical change in value and so forth. Now, the safety margins, there's some variety there, and that, of course, reflects the fact that this is somewhat different to what it was when we first did it back on the 2nd of January. Now, you can step through all of these screens, and it will give you a side-by-side comparison of all the different elements. For the sake of time, I'm just going to fast track a bit and go down here. This, of course, is your price chart, and I wanted to show you guys this final chart, which is the forecast updates, and you might not be familiar with this chart. It's a bit different to some of the charts that we've shown in the past. And what I'll do, I'll just zoom in on it for Flight Centre, because it's actually a very useful chart. What it is showing you is the difference between the intrinsic value and the price, looking at the last 12 months. So if we go back here to March of last year, you can see that the price of Flight Centre was around $55 and the intrinsic value was around $50. So it was trading at a premium. Now, throughout the course of the year, the price of Flight Centre contracted quite a bit to the point where it's now $36. And around here, the beginning of January, 2nd of January, the price was $32.84, and the intrinsic value estimate was $41.64. Now, what that's showing us is that yes, price fell, and yes, intrinsic value fell, but price fell by a lot more than intrinsic value. So we identified that as an opportunity where we felt that the market had overreacted to the circumstances impacting the business, and it had gone from being in a premium situation to trading at a discount, and so hence it ended up in our money portfolio. This chart's also very useful if you want to look at some other stocks that might have done really badly, just by way of contrast. So this is WDS, and you can see how it fell off a cliff here back in October. And that, of course, raises the question, well, what happened? Why did it go so badly? And what we can do is quickly flick over to the value versus price chart, zoom in on the relevant area, click this announcements button, and you can see there that there's an announcement right at the time when that happened, and I can just click on that and it will load up the announcement. Okay, so I probably better wrap up because I'm getting given the hurry up here, but you can see that Skaffold is designed to really enable you to sift through a large universe of stocks and come down to a small list that you can then do some more research in. And of course, we've provided the tools to do that research through the evaluate screens and the compare screens. So I'm out of time, but I hope you can see that we have had a lot of great new functionality to Skaffold over the last year. And as Roger has said, we really encourage you to follow a methodical process in your investing and focus on building a portfolio, not just picking stocks. Thank you.